Welcome everyone. In today's video, I wanted to talk about basis trading, which is a strategy that is currently netting traders up to 97% APR. So basis trading is an attractive trade for people who are unsure of where the market is going next, as well as whales who know that they would immediately dilute any farm that they would enter. Another great part of basis trading is that you are able to get high returns without the risk of impermanent loss or getting rug pulled. But on the other hand, returns can vary wildly due to market conditions and can even be negative if you do not monitor the situation. So basis trading is a trade that you would want to take during a bull market, and I'll explain why. But before I explain what basis trading is, I'll have to explain what perpetual futures are. So perpetual futures are derivatives that track the underlying price of the spot asset. So for example, we have a Solana perpetual future, which will track the price of spot Solana. So perpetual futures are used to get leveraged exposure to the underlying asset. And in this case, it's Solana. So the perpetual futures price should, for the most part, track the price of Solana itself. But as you can see here, the Perp price is $211.92, whilst the Oracle price for spot Solana is $211.34. So in order to keep the Perp price in line with the spot price, you have what is known as a funding rate. So every hour, the people who are long the Solana perpetual futures must pay 0.011% of their position to people who are short the Solana perpetual futures. So in that way, once the APR gets high enough, people who are long the Solana perpetual futures contract will think, maybe it's not worth it to hold this long. Maybe they'll decide to close their position, and so that should hopefully drive the price down of the Solana perpetual future in order to mimic what the Oracle price is. Additionally, you will get people who will come in and then go short the perpetual future in order to collect this funding. So basis trading effectively means that you would go short the Solana perpetual future whenever funding rate is positive, and it's quite high right now. So you would go short the Solana perpetual future and long spot Solana. And in that way, you create a delta neutral position, meaning that the price of Solana could go up, down, or sideways, doesn't matter. Your portfolio will stay the same value, but you will be generating 95% APR on whatever capital you dedicate to this trade. So in this example basis trade, let's just say you have one SOL. And when you have one SOL, it means that you are going long that SOL, and that is positive delta. You have a delta of 1 there. And now for this basis trade, we also want to go short one SOL, and that's negative delta. So when you do 1 minus 1, it equals 0, meaning that you have a 0 delta. And 0 delta means that the price of SOL could go up, down, sideways. Doesn't matter, the value of your portfolio is going to stay the same. So the price of Solana could go up, down, sideways. It doesn't really matter. Your portfolio value is still going to stay wherever it was when you first opened that trade, but you're also then able to collect the funding rate. But you are also able to collect the funding rate, which is currently sitting at above 90%. So you can see why this strategy might be attractive for some people who don't really want to guess the price of where the underlying asset is going, but they just want to collect yield. So you could do this on the Sol Perp, and you could also do this on the Bitcoin Perp. But as you can see here, the funding rate for the Bitcoin Perp is a lot lower than the Sol Perp. So if you want to collect as much yield as possible, you'd want to do this trade on the Sol perpetual futures. But I'll show you how to do it on Mango markets. So you could actually do this on any perpetual futures DEX. So Bonfida, Drift Protocol, Risk Swap. But I'll show you how to do it on Mango markets. And I think it's easiest to do it on Mango markets because they allow for you to use Sol as collateral. And when you use Sol as collateral, the trade gets a lot easier, and I don't have to explain as much. So what you'll need to do, you'll need to deposit some SOL. I'm just going to deposit 1 SOL into Mango Markets. Just note that if you've not used Mango Markets before, it will cost like 0.03 SOL to open up an account. So just keep that in mind. Okay, so now I've deposited 1 SOL. Currently, I'm long 1 spot SOL. To complete this trade, I need to go short the equivalent amount in Solana perpetual futures. I'm just going to go to sell, just go to market, and I'll just do 1, and I'll press approve. And then here we can see my position. It should come up in a second. Yeah, so here we go. I'm short 1 sol perp, and I'm also long 1 sol here as well. So wherever the price of Solana goes now, doesn't matter. My portfolio is going to stay at the same $210 level. However, I will be collecting the funding rate, which is 96.44% right now. So I put in $210, and then we'll multiply that by 96%. So if the current funding rates were to stay the same as they are for the rest of the year, by the end of the year, I would have $411.6 just by doing this strategy and taking on very little price risk. Now, let me just tell you some of the downsides before you decide to ape in all of your money. So one of the downsides to this is simply opportunity cost. You could go long Solana. You could simply go long spot Solana and outperform this strategy. I mean, Solana itself is up thousands of percent this year, so you would have made a lot more money going long Solana than simply doing this. Additionally, if the perpetual futures price comes off the Oracle price by quite a bit, you could potentially get liquidated. So I think you need the perpetual futures price to be off the Oracle price by like 50%. Additionally, you have the risk of mango markets getting exploited and all the money drained, so you've got to watch out for that as well. And you just have the general risk that the Solana blockchain itself will go down, as it did like a month ago. Luckily, from that event, not many people got liquidated, but it's definitely a risk that you should be aware of. So thank you for watching. I hope you enjoyed this video, and make sure to subscribe for more videos like this one. This video is unofficially sponsored by DeGods NFT, the first deflationary NFT set on Solana, where common traits become rare and paper hands pay a 33% tax if they sell below their buy price. Make sure to buy yours at alpha.art.